All right. Hello, everyone. Welcome back to another month of our Charlotte IBD meetup group. I'm going to go ahead and just drop the link here. If it's your first time here, you can click this link and you can sign up for email reminders. We'll send a few reminders and recaps to get a recording of the meetup once you get on our email list if you haven't done so already. So, yeah, we're calling this one just Halloween tricks and treats. Hopefully we'll share a couple of treats with you guys. We're gonna emphasize just individual stocks this evening because, there's of course always a bunch of macro stuff, and I'll go through a couple of things, just that are always kind of on our radar. But we do want to focus extensively on stocks because, we think we're setting up for potentially a really good run through the end of the year. And we want to make sure everyone's buy list is ready. And so, we'll share some things. We'll share what we hold and, what's on our watch list, and hopefully get some feedback from you guys about what you're looking at, so we can make sure we're not missing anything. So we'll go ahead and get started and just, give maybe some new people the intro. So yeah, this is the Charlotte Investors Business Daily Meetup group. We've got over 2,500 members now, and it's just a group of like-minded individuals who get together once a month to talk about leading stocks. A lot of what we talk about today will be grounded in the book How to Make Money in Stocks by William O'Neill, and we'll talk about his often cited CANSLIM acronym for leading stock criteria. So just a disclaimer, we're not giving advice on this meetup. We're just going to offer some information for education. And so please discuss investments with your investment advisor. So like I said, a lot of the stuff we talk about today is based on how to make money in stocks, and William Neal coined this acronym CANSLIM. And so it's just a list of seven factors, seven key components of any leading stock that he wants to look for. So that, each letter representing something else. So current quarterly earnings per share. So we're looking for at least 25% typically in earnings. Annual earnings growth of at least 25% over the past 3 to 5 years. Looking for new things, new products, maybe new industry changes, new management. So there's a number of stocks we'll talk about, with new things going on, because there's got to be a catalyst to get that interest in a leading stock again. So supply and demand, of course, volume's a big marker for what we're looking for. It's, we want to see good price action on heavy volume, which is really, the heavy volume is the institutional sponsorship that we are looking for. So, the pension funds, the mutual funds that are buying, they can't hide. They can't hide because they are huge. They want to accumulate a stock. If they want to, they will push the price up, and they will be strong hands for the next leg up. Leader or laggard. So that's an interesting one, because often you'll see industry moves, and you'll think, okay, I'm going to move this. I'm going to buy this one because it hasn't moved yet, but the industry is generally doing well. Some things that come to mind are Nvidia versus AMD, right? Pick the leader. Kava versus Chipotle. Pick the leader, being Kava there. And then, the last letter here, market direction. Really the key component, because, as the market goes, so goes the rest of your stocks. Right now, it looks like we're in an uptrend, and on a long term, short term, intermediate term, in an uptrend, how we see things. So we'll talk a little bit about that and why we think we could be going higher through the year end. And okay, I'll go through and summarize a little bit about the three pillars that we use in our investment approach. So the first one being technical analysis. That's really about price action, some volume action, but trend being the most important thing. Then there's always these other things, breadth, sentiment, and ratio analysis that we that we touch on, but are secondary, but a part of the technical analysis family. And then fundamentals, so we kind of sum it up in this CANSLIM acronym that we just went over. And we get a lot of our information from Investors Business Daily. They have great reports, great news articles, great sources of data. So it's a key tool to how we scan fundamentals for stocks that we want to own. And then macro, we like to have a kind of a grounded view in the macro environment. We subscribe to Hedgeye Research. They provide us with some of that macro data and outlook just to it's important, I think, just to have a broad framework of how our economy is or isn't growing, and where inflation is trending and fluctuating. So from here, I'm just going to go over a few different kind of topical things just to touch on, because it's all stuff that's probably in the back of people's mind, and things that we're observing. Obviously we have a presidential election coming up, and this is just the odds. So a little bit of fluctuations between who's leading based on these betting markets. You see Trump just retook that betting odds likelihood, I think, in the last few days. Not really sure why, but who knows? Still have another month. And so I guess next week we'll actually, I think the second Tuesday of the month is on election day. So I'm assuming we're not going to be hosting it that same day. We'll have to double check. But anyways, keep an eye out for that, because obviously we don't want to we don't want to compete necessarily with election coverage on that night. So you probably noticed China. China had a huge breakout in the last 2 weeks. There was some news about clearly massive Chinese stimulus. So the government's doing things like cutting rates and cutting deposit ratios, and cutting down payment requirements across property. So they're doing a whole lot to get things going, because they've really had a lackluster market for the last 3 years. And so, wow, the market has taken notice. And like us, you may find yourself uninvested in China at this point in time. I'd love to hear feedback from you guys. Maybe in the chat too, you can just say if you've bought any Chinese stocks, if you own any that you're maybe that you were selling on this pop. It would be interesting to know, because I'm not sure. It's been such a hated country for so many years now. I think basically since COVID, right? It's been kind of like a don't touch country for investing. But would be interesting if anyone has done anything with this. I think a 40% move certainly draws some attention, but it's unclear, and you can see how shaky that confidence is just with this 1 day pullback of 9%, following, I guess, some kind of other government meeting where they didn't have they didn't continue to increase stimulus like maybe people were hoping for. So anyways, that's something to take note of. That massive volume here makes you wonder, okay, is a bull market about to start again in China? And it comes at a time too when you might think, okay, rhetoric gets heated heading into election, right? And maybe people are saying, oh, we're not going to trade with China, but in reality, maybe we are going to trade more, and you can we'll see that in the market as that plays out. But anyways, we'll talk. Let's see. Negative bias against China. Yep. No confidence. Got it. And nothing in China. No plans to. So that continues to be the case. So for now, people are letting this go. It sounds like. Okay, I wanted to comment on this Bitcoin positioning. It's one of our favorite longs, just long-term fundamental story kind of too, where it's a new asset class. Everyone gets that now, and I like looking at this guy, Crowded Market Report. I've commented it on a few times, and I think it's interesting. He shows that the commercials, which is the red bar here, essentially the smart money, is the most long they've been in I guess at least a couple of years now. So and speculators are getting net short. So when this happens, and you can see when it happened in November um, of 2023, how the Bitcoin move started kind of right around there. So there's something to keep an eye on. We're long it through Mister right now, our micro strategy, but yeah, anyways, I find this information helpful, interesting, and this is purely what this guy does, trades only off this data essentially. So I like to see that, especially being long Bitcoin, to see it getting shorted into this rally, I think is a good thing I think for a bigger move up going forward. So CPI, still going to talk about it. This is the CPI and the PCE in orange. So CPI is in blue, PCE in orange. Just wanted to point out down here, we're going to get this September number, I think tomorrow or Thursday, right? It's this week. And so we're going to get one more deceleration. I think that's a foregone conclusion. We're going to get a 2.3%. In October, we're going to see a risk of it re-accelerating. I don't know if it's going to do anything for markets. I honestly don't like, I don't really care now at a certain point, right? Like if it's between 3 and 2 or three, I don't think that's going to bother markets. It shouldn't, in my opinion. And now even at this 2.3, I just drew this red line to show this is the 34-year average of CPI. It's 2.7%. We are now below average in that regard. And so if you think that we shouldn't be accommodative, if you want to dig your heels in as a bear and say, the Fed shouldn't be accommodating, inflation is going to reaccelerate. Well, we're still below average. And, now we've got some room to the upside to work with to get to average. And, it's not worth risking, I don't think, a hard landing just to get it to 2.0%. Not to mention the PCE is actually headed to 2.0. And if it bounces around, I just don't think it's a big deal. So, anyways, just the more you know. Here you go. This is our thoughts on CPI kind of being benign going forward, even if oil rallies, right, for different geopolitical reasons or who knows, or because China's stimulating. Those are all kind of temporary things and just signs of the cycle improving, perhaps. So, there's a lot of things at play in CPI, but I think mostly benign going forward. So we talked about this too, this SOM rule last month, and you can look up basically how it's calculated, but it's just talking about an increase in unemployment and how it essentially it gets an escape velocity once you hit a 0.5% increase in unemployment um, over some 12-month period. And then you go into recession. Well, we're sitting here flirting with this SOM rule trigger line recently. And so that's kind of the question. If the labor market is going to deteriorate, all that stuff, and then we're going to be in a recession or we're going there. And so what happened was Friday, we actually got this, it was considered a blockbuster jobs report with a bunch more jobs added than than consensus had, maybe 100,000 more than consensus had expected. But you look back over the last 3 years, it's really, it doesn't stand out particularly strong, but it was much stronger than expected. Following, a little bit of a slowing here in the labor market, like the Fed has intended. So, we've seen rates come up. We've seen the probability of a 50 basis point cut happen in November. We've seen that probability go to zero. So actually now there's an 87% chance of one cut in November, and actually a little bit of a chance, a 12% chance that we maintain the Fed funds rate here, where it is after that kind of aggressive jump start that the Fed took just, I guess, a month ago. So stronger labor means, there's not as much of a risk maybe as the Fed might have thought before of us going into a recession. And just for our framework, we kind of look at this U.S. leading economic index to see, if the economy is improving on a year-over-year basis. this continues to actually be in negative territory. It's been there for a couple of years, but it's getting less negative. This red line being a recession signal. Arguably we did have that recession in 2022, and there should be some shading here of gray. And since then, we've been recovering and we've been getting our way out of that tough economic environment, honestly. So, we're encouraged to see this continue to improve. You can see what happens. Recession signal, we come out and turn positive. So, the market's rallying despite, despite not a particularly strong economy, but there's a lot of room, I think, for this to improve going forward. Okay, and here's a couple more things we're going to look at. The 1 year and 2 year, it's kind of funny how, right, you cut by more than expected and then rates go up. That's what we had here. It's this rally in rates, of course, just saying, if they're cutting, if they're cutting more now and the economy is stronger than expected and maybe inflation doesn't come down anymore and, maybe there's less of a risk of a recession and all this stuff. We see this rally in rates. I don't think it's, I don't think it's worrisome. I don't think it's the same kind of worrisome rally, right? I don't think it's necessarily inflation fueled as much as it might be, just good, strong economic activity fueled rally in rates. And just to put the point even stronger here, you have the Fed cut rates, and rates have rallied quite a bit. So they cut by 50 basis points, and the 10-year interest rate has actually increased by 50 basis points over that same or since that cut right here. So so the market is a funny thing, but I think that we've seen the market hold up quite well despite the rallying rates, because I think clearly what we saw was right here, good news is good news. This was the 2 day or the Friday, just last Friday, where we had that jobs report. Good news is good news. Stocks can rally on that despite rates going significantly higher, it appears.
Wes, let me make one point here,
Mm-hmm.
and that is, the reason that the intermediate and the long end of the curve rates rose was because of the normalization of the economy. So what the economy is figuring out and what the market is figuring out, interest rate scenario, the long bond and so forth, it's figuring out that we're going to have a soft landing and the economy is going to continue to grow. And so we're reverting back to a normalized yield curve. So that's quite good. So that's quite good. So we don't have to worry about the recession. Good news is good news. Rates are still coming down on a gradual basis. And that's very, very stimulative in terms of driving liquidity in the equity market. It's really the Goldilocks environment that you're wanting, and we're seeing it unfold right in front of us.
Yep, that's right. That's right. And I wanted to point out this from just to make a point. This is from last month where we were talking about things, and we had another kind of sharp pullback in mid-September. We had one in mid-August. We had one in mid-September. And just to make the point that, okay, for whatever reason, this narrative was percolating that the consumer was in bad shape. We were getting some anecdotal things. We had Ally Financial, that was the main one, that reported something about how net charge-offs were deteriorating for their car loan book. And so, in sympathy, a lot of these other stocks that are tied to the consumer lending businesses, right? Like Capital One, Discovery, Synchrony, these guys, all kind of fell sharply with that news. So, there's always something that is a risk in the market. Always, you never know, when the environment might shift. But this might have been part of what led the Fed to cut by more than expected by doing the 50 basis point cut, because they don't know either, right? They don't know if things can get worse. They don't want to see, Ally Financial's loan book just completely collapse by keeping rates this high for longer than they might need to. So, I think that they're um, willing to exchange, a little bit of creep up and inflation to 2 point, what, 7% or something, so that we avoid some kind of horrible collapse. I think it's a smart response on their point, but this might have been a large factor in, what they were seeing in markets. And so, it's just a reminder that in the market, things can change so quickly because we're always trying to discount and, figure out, okay, well, if the Fed is pivoting, if they are into an easing stance, then, stocks can work. And so, just this is actually the financial sector ETF, just to point out, right? We had this horrible August collapse based on, outside forces. And then we had this other scare that we just talked about, fueled by a little bit by Ally. And then this other little, tight digestion. And so all this stuff we've snapped back. And a lot of it has been really Fed induced, where, the Fed gets on TV on Friday and they start talking about how, yeah, we want to make sure markets are stable. And then they come in here and cut. And so, the financials snapping back and looking like they're about to make new highs in this volatility contraction pattern is, I think, quite encouraging, right? We're just barely off of highs right now. And I'm just going to go through a few more of these that, this is the setup in the market that we're just seeing all over, is these VCPs, the Mark Minervini, coined volatility contraction pattern here, where we're getting a low, a higher low, and a higher low. And you see NVIDIA, the leader of the market, breaking out of this, breaking out above this 131.25 level. And it looks like it's on its way to new highs. And this has been the leader of the market. And so, it can continue to hold that torch and take us forward through the next leg as well. So, we're seeing this pattern kind of everywhere, the classic VCP across the market. Here's the QQQ, right? Very, very, very similar to this, to that NVIDIA chart as well. Same thing, VCP. And, these shakeouts, these pullbacks, each one being more shallow, have still been extremely anxiety ridden. The headlines are going crazy on each of these, right? This one being the Japanese yen trade and the unwind of the carry trade. Right here, God, I don't remember exactly what was happening here, if there was a particular thing, but then the Fed cut following. This is probably just recession, talk. And then right here, we even have this war scare that was for 4 days. And then the market quickly has been supported despite possible escalation. So there's a whole story to this volatility contraction pattern. But it's just a beautiful setup, it looks like, where we're trying to punch through that level. And there's plenty of reasons not to buy right here, but the fact is, this is a really, really nice setup on the indexes, and we're going to see some stocks that have already broken out that are at, well into new highs during this environment too. But we're encouraged because it doesn't hurt to have the market as a whole breaking out as well. And this is the QQQE, just to show, very similar pattern as the QQQ. So it's not just the same narrow type of market. We've had different periods. It's throughout this year where it's been, narrow. It's been the Mag 7, right? The Mag 7's been a leader during a lot of this. You can see though that the Mag 7 has been lagging, and you can see that there are a lot of things that could be making new legs higher instead, while the Mag 7 is still, Microsoft might be, I don't know, 15-20% off its high still, and Google looks weak, and Apple, actually Apple holding up nicely. But this pattern is what we're seeing across the market. And most importantly, really for us, is this FFTY, the Innovator IBD 50 fund, sort of a barometer for our style of stocks, these growth stocks. This also exhibiting those characteristics, not as strong as some of those indexes we saw, but nonetheless, higher low, and looks like it could be ready for another move higher. And so that's why we're going to actually stop this portion of the presentation right here. We want to focus most of our time on stocks today. Roy's going to take you guys through, what we own, what we're looking at, and then we'd love to hear obviously some things on you guys' list to take a look at. And the rest of the presentation that we maybe go through, that we go through every other month, I'm going to include that still in the presentation when we send it out, so you can download all those charts, um, on your own time tomorrow when we send that out. So with that, I mean, I'll stop sharing and turn it over to Roy for the remainder of this time.
Okay. Share. Okay, is everyone looking at my screen? I've got market surge, the NASDAQ on my screen. Let me have a show of
I
hands.
can see it.
Fantastic. Okay, great. Wes, fine job. Thanks for putting that together for us this evening. What's very illuminating to us, it's the perfect VCP patterns that are just carving their way up in a very bullish fashion right here. So, you've got, if you read Minervini's books, he talks about this in great detail. And we find these patterns, when these patterns occur like this, particularly in the index area, it's very, very supportive in the market. And then that's one part of of having the framework and having the process done for you. Then the second part is actually picking the stocks. And we're going to go through an exercise tonight because this is an extremely valuable time for you folks, and for we're providing some great resources here that hopefully to educate you, to assist you, to help you become better investors and better traders. And this is even more glaring and important when we take a look. We're going to go back and look at what we talked about a month ago at our last meetup. So we can bring you on this journey and bring you on this ride tonight in terms of having what this market looked like a month ago, what it looks like today, and how we might plan and adjust for the subsequent bullish fashion that we're expecting the second half of the year in the next couple of months. So this is a NASDAQ index, and I've annotated the power trend. Of course, this has been developed by Justin Nielsen, Charles Harris, and Mike Webster, and from their market school work at IBD. And what I like about it is just puts things in connotation. Now, what it means when you're in a power trend, and a power trend is established when you're above the 21-day EMA, that's the exponential moving average for 10 consecutive days. The 21-day is above the 50-day for at least 5 days. And you've got to have the 50-day turn up, and you have to be green the day that the power trend begins. The market has to be up on that day. And what this suggests and how you can utilize this is that's when, from market school, that's been a great opportunity and time to put margin exposure on the books. Now we don't put a lot of margin in our client accounts, but occasionally we do personally. And we're in this environment right now where a power trend recently began. We're close to breaking out. We have these VCP patterns that are setting up, and things couldn't be rosier. So we want to take you through a snapshot from an educational perspective and show you our positions now. We think that's important, and we're very, very transparent on our Twitter account We think it's very, very useful for our followers and for you and other people that pay attention to what we do. We think it's useful, and it's a way of us giving back to the community as well. As we want everyone to succeed trading and investing and be very successful and so forth. So we're in the power trend currently right now, and September the 10th, right here, this point right there is when we met last. So we met right here, and so what we're going to do is we're going to take a look and go back and take a look at our portfolio, and we do think that we're in among the leading stocks in the market today. And so we want to go back and take a snapshot. We own, and you might take a snapshot of this real quick. So this, let me pull that up one more time. Sorry about that. These are the 17 names that we own. So you can see we had a great day today. We have alpha in many of our positions. That means they're outperforming the market significantly. And we've got a host of the leading stocks in the market. We think, by the way, in terms of our quote forecast, the trend is up, and we think that the next couple of months is going to it's going to be amazing. And we think that we've got 5 to 10% upside in the averages. And if you have 5 to 10% upside in the averages, you're going to have these stocks that go up 20% from here. So we think that all the positions that we have right now have another 20% position or 20% to go from here. So here's ANET, and here's September 10th right there. So we, of course, and we're long this stock. We pointed this out then. It's, of course, they're in the networking area, in the data center area, right in the middle of AI, along with VRT. We view this company as the leader, and we think that the way these stocks are set, the way this stock is setting up, it can certainly go from 400 to 500 by year end. So it's got perfect bullish action. It's above the averages. It's in new high territory. Earnings are great. You've got 20 days to the next earnings quarter, and we think that report should be good, and the stock should gap up on that report, and you should get some earnings drift higher as well. Axon, which is the old Taser, and we profiled Axon right there. And see, all these stocks were setting up a month ago when we had a very brief meeting because we had the presidential election that night. So we got off promptly at 9. But that's when we identified the stock. And what got our attention was the great volume on the last earnings report. It was up 10% in price. Volume was up over 300% that day. And that's a leading stock. So it's had this nice move where it's drifted up. And we think, of course, that it goes higher. We think this is a $500 stock. Kava, which is arguably the leading restaurant stock in the marketplace today. And September 10th was right there. Right there. They've only got 309 restaurants in the country. There's no reason they can't have 3,000. It's one of the few restaurant companies that's profitable. Sweet Green is not profitable, but they've got a great product as well. The leader, of course, has been Wingstop, Chipotle, Texas Roadhouse, Shake Shack, but Kava is breaking into new high territory right here. And we recently bought this back on the pullback in the last week. That's where we added it on the pullback recently. Costco Wholesale, blue chip stock. September 10th was right there. Not a lot of progress, really kind of going sideways, but the stock was going into new high territory, made a 52-week high, and then it's been basing, and so now we are waiting to see where the stock goes right now. It's typically, a defensive stock. However, it's got great numbers, and it is really a slow and steady blue chip stock when you take a look at it, from where the stock has been, in the last 10 years. It's been in that steady uptrend, not too hot, not too cold. Coupang, we posted this on our Twitter account, and we just pressed it yesterday or the day before, if I can pull it up here. Here we go. The stock was upgraded yesterday by a Wall Street firm. You had very, very nice volume stock. This is known as a pocket pivot. The stock broke out to 52-week highs on the upgrade. Just a perfect action here. As you can see, it's gotten really tight here on the right-hand side. And we're in this stock. Probably around a couple of points lower than where it is now. I think that's our average cost. We bought it in this base. And what's attractive to us are the great numbers. Earnings are going from a loss to 54 cents. And this is a substantial company in Korea. You can see they're doing $30 billion in revenues, and the relative strength line is confirming new highs. So that's attractive to us. And we certainly see this stock going from 25 to 30 by year end. DoorDash 910 was right. And we were long this stock earlier. We were long this stock at this particular time as well. But there it was on 910 when we profiled it. And then you had that 911 where the market reversed, was down 300 points on the opening and then closed up 300 or 400 that day. So there's the reversal there. Perfect. Look at this perfect cup and handle breakout. And now you're knocking on the door of the old highs right here at 143.34. So very strong, very strong stock, going from a multitude of yearly losses. You can see 1, 2, 3, 4, 5, 6 straight years of losses. Now it's going to be profitable. So that is what's going to drive this stock forward in our view from here. And we think this is, it's a $200 stock by the end of the year. Flutter Entertainment, which was a great stock. We on 920, we talked about it, and 910 was right there. So we profiled this stock right there as really our favorite position, along with GEV, and the stock reported earnings that were they pre-announced. Essentially they announced earnings, and also they've got a huge buyback, leading stock in the leisure gaming area. They're responsible for the backbone of FanDuel and DraftKings and all these gambling sites. They actually provide the software and the research to run those gaming activities. So you can see where this stock moved higher on the largest volume in the past year. It's pullback. This is a perfect pullback set up right here. So this is a perfect pullback buy from a trading perspective. And we've got a 10% position in all of our accounts in this stock right here. GEV, which was again 910, was again one of our favorite stocks. And we remarked that night that we thought the stock could, it wouldn't surprise us for the stock to be up $10, the next day. Well, it went up 50, $63 since then. And it was up 10, $15 the first 2 days after our meetup group. So what makes this stock so interesting is it is new merchandise. It's a new IPO that's got a great price, a $200 price, institutional stock. You got liquidity. Look at how many shares this stock is trading a day. Almost 3 million shares a day. Earnings were going to be up 293% this year, and up another 100% next year. And from this breakout right here at 200, it suggests the stock is going to go to 300 to 400, in the next 12 months. So we think, it came out of there. It's one of the leading stocks, just like APP that we don't own. And we think that the stock is just pausing before it makes its next move up. And we actually bought it back 3 days ago, right there. We had made a note. We actually sold it right there with a 30% gain. And on that first down day, and that was premature. We sold right into the strength there, going a little bit higher. But the way the stocks acted and built this small base, this handle right there, is very, very bullish. And we bought it actually back 2 days ago, so we have a nice position there. Robinhood was a stock that we bought today on the breakout, taking out this 2488 pivot on volume that was up 178% higher than normal. So we had great confirming volume. Notice the cup and handle breakout right here. So that's a classic O'Neill. There's a classic O'Neill, a little choppy cup, but then that handle is well defined. And you can see the stock broke out in power today. So this was a stock that we rebought today. MicroStrategy, which is our biggest winner right now from our recent purchase, and I think we bought it right about here, right when the stock was bouncing off this 200-day. And we're very, very bullish on Bitcoin. And we felt like MicroStrategy was the best way of playing it, and it has been. So this is going to new highs right here, over the last month. We expect, and what's 910? Yeah, and we bought it. Yeah, we bought it on 9/11 right there that day. And that's when we also had the meetup, the day before right there. So this has turned out to be one of the nicest gains that we've had short term on our books. And incidentally, we think this thing can go to $400. So we think you've got a double in it from here. If Bitcoin doubles, this is going to actually perform much better than that. It's sort of a leveraged way of playing Bitcoin, if you will, because they're a Bitcoin acquirer. They've been borrowing money, buying Bitcoin, and doing it over and over again. We've got just a couple more names here, and then we'll open it up to the floor. Here's NVIDIA. We bought NVIDIA back. This is one of our biggest winners of the year. We did sell it right there. We did buy it right there. That was one of our biggest winners, and we bought it back 4 days ago at 117 on our as it reversed right there off the 50-day bouncing, and as the uptrend continued right there. And we think that this stock will make new highs. And we also think that, and of course, these are just thoughts. This is just our musings, if you will. But Nvidia has been the leading stock in the marketplace since this bull market began. We think that it will be the stock that goes parabolic before this thing is over. And being someone that's going through these periods, these blow off periods, like the internet bubble in 2000, I've been well equipped to see those and play those for maximum gains. And we think NVIDIA has a tremendous amount of upside from here. And we think it's going to go parabolic before it's over. Notice that these numbers at 30, they're, the last quarter, $30 billion. And before it's over, we're looking for them to do 70 billion in a quarter. So if you can imagine these numbers, this growth, 18 billion, 22 billion, 26 billion, 30 billion. We think over the next 4 quarters, they'll do 70 billion in a quarter before you've got peak earnings power. And if you're doing 70 billion in a quarter, this stock, just from a valuation standpoint, this stock's going to be somewhere between $300 and $500 before it's over. ON 910 was right here. And then you had that outside data, the upside the next day. And, what we liked about it is the stock had been building this right side. You've had 2 great earnings quarters that got our attention. And we were long this stock right there, but we featured it 910. This is obviously, of course, the shoe company. Palantir, which is one of our biggest positions on 910. It was right here. It was right here, breaking out to an all-time high. It was announced that they were moved into the S&P. They were moving to the S&P 500, and that's one of the reasons that you had the volume breakout there. And then when it moved to the S&P 500, there's the volume where it was actually moved into the S&P 500. And we've got high hopes for this one as they build out their commercial enterprise area of AI with businesses. Making a 52-week high, well, obviously we have a very sizable profit, of course, in that one. Sharp Ninja, one of the leading stocks out there. So these are, you can see the uptrend that all these stocks are in. So the strong get stronger. You don't want to be buying, you don't want to be guessing the bottom in a lot of these tech stocks that blew up. You want to buy the stocks that have leading RS. You can see Sharp Ninja's got a 98 relative strength, and they've just got solid numbers. And of course, they're in they're in all the retail establishments, and they've got great products at great prices. Spotify on the 10th was right there. What we like about this, and I almost bought more of this today, but we have to sell something to make room for something. We're fully in. But there's the 9-10 meeting, last meeting. And what's nice about this stock, what's attractive, is it's gone from 1, 2, 3, 4, 5, 6, 7 straight years they've lost money. So 7 straight years they've lost money. Then they're going to make $6 this year, $9 next year. And notice the stock losing money, the stock got as high as $387. What do you think the stock is going to do making $9. It's going to be significantly higher. So the earnings projections are great. The numbers are probably light. And, this has got great action, great growth company. And we like it right here on the pullback buy on the turn right here. It's a perfect setup. 910 on Uber, leave is right there. And obviously Uber is the leader in ride sharing. It's going to be interesting. Tesla is going to have their meeting Thursday, their auto taxi meeting Thursday. So it's going to be interesting to see how what happens there.
Hey, Roy, I wanted to point out too,
Yeah.
something interesting about that Spotify. So it's knocking on the door at all-time highs. I think you said 389 or something was where that high was.
Okay.
It actually it crossed it last week, or
Oh, right
387 being
there.
that high, broke out the new high. So it's that green line breakout we always
Wow.
talk about.
Yep.
Um, and it's that tumultuous new high zone where you're just nothing wrong here, but it is making all-time highs, which we love, and pretty impressive comeback story. Um, they'll be up maybe 400%, I think, from those lows.
Yeah, and that, and again, the way that the back of a cocktail napkin, where would the target on this? Where would it be? You would take this previous high, which is, let's just say it's 400. You take the previous low, and let's just say that's 50, and so that's 350. You'd add 350 to 400. That suggests a $750 price target before the run's over. That's just a back of the envelope technical analysis, trend change, flipping it up, and of course that's sizable when you go through when you get through these green line breakouts, and we're looking for that actually. See, for Palantir, see, the true move takes place not from here, not from the bottom to here. It's the next double. So this stop was roughly 50 to 10, 40. So this suggests $100 price target before the run is over, before the trend is over. And these stocks that put in these green line breakouts and make all-time highs, when they haven't made an all-time high in a while, when they get going, they can really move. There's the green line breakout after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years on SMCI, and then you had to move there after the green line breakout. This was one of our nice winners that we had a year ago or so. That's what you're looking for. You're looking to get into all-time high territory, no overhead, no supply, and then they can go parabolic. And you've got $5 before. Well, actually, the green line breakout would happen right here. But if you take that out, you're knocking on the door. You're really knocking on the door of the last 15 years. This breakout. So we think this is very, very powerful coming out of here, and we think it's a chip shot to go from 200 to 400 as it regains its momentum here. This is a very, very powerful situation right now. And with that, let's go ahead and open it up, and let's talk about individual stocks. What would you guys like to pull
I
up?
I have a couple
Take
of
a look.
questions.
Yeah.
A couple of meetings ago, you were not as enthusiastic about ANET and the Palantir, and the reason you gave is their earnings growth numbers are not as big. So why all of a sudden change of heart?
Well, Wesley has been beating me over the head about Palantir, So acquiesced with Wes on the fundamental side, and yeah, the numbers. The numbers. I don't think they're that great. They're blue chip numbers on ANET. It's a $125 billion company. But why am I more enthusiastic? The price action. Like I can't ignore this price action. So, I mean, these numbers are fine. And really what got my attention again as well was Jensen Wong. Uh, he reiterated that the demand for the Blackwell chipset is off the tracks. It's very, very robust, very, very strong. And that's got me interested in the data center companies again. So the price action here, you can see, and this is really just a nice little VCP here and here, two contractions, and then it broke out. So the price action on the 10th, and we actually, by the way, I think we just bought this back like right here, like in the last week.
Yep.
So we just bought it back in the last week, and September 10th. See, it wasn't looking as good. See, it's below the averages, but then it popped up. And it took us a couple of weeks to get back interested in it, but we are interested in the price actions got our attention. That's why.
Do you have any thoughts about what would be the Harris portfolio versus Trump portfolio in next couple of months?
No, it's easy. It's easy to speculate, but the stocks will tell you rather. I mean, we have the leaders. I mean, you're clearly seeing just about every stock we have. It's making a 52-week high. Those are the leaders. So, and those are the leaders despite Trump, despite Harris. Like NVIDIA is going to sell their chips all over the world to a demand that can't be satisfied, regardless of who is in the presidency position. So we're letting the stocks tell us. And while other people might be confused or dismayed or hesitant because of the election, because of the potential chaos that might ensue, policies and so forth, the economy, and so there's quite a bit of worry out there in the marketplace, and we think that satisfies the sentiment element of what we see and what we've seen before. We think it's bullish. So
Can you be
we don't have a portfolio for Trump and a portfolio for Harris.
Can you be bullish on GEV without being bullish on energy-related stocks? Because they tend to go hand in hand, their business.
With who?
GEV, you have it in the portfolio. Can you be bullish on GEV without being bullish on the energy stock?
Yes. And now, you guys have probably been reading a great deal about nuclear and what's going on, in the nuclear area. And rather than think that that's a Biden play or a Trump play, apparently Microsoft and Google, they're actually buying, they're building data centers using nuclear power they're outsourcing through like 3 Mile Island from Microsoft, which is nuclear, and CEG is their partner, Constellation Energy. And this is one that we've essentially missed. We missed this. We played GEV and VST instead, but GEV's got a partnership with BWXT, and BWXT's signed, I think, a $6 billion contract with the U.S. government to provide nuclear materials for reactors, and they partnered with GEV. So we're getting nuclear exposure in GEV, but this BWXT is a pure play as well, just like CEG.
How about ARM Holdings?
It's definitely a laggard. It's definitely a laggard. We made the decision, and we played ARM earlier. We owned ARM here at $65. We bought ARM way back here, and then sold it, and had a nice move in it. That stock, you can see it doubled. But ARM's it's not a leader. So the ones that we don't want to buy like ARM or AMD. Now there can be trades. Any of this stuff can move. Every single stock that you pull up can move, but we're trying to position ourselves into the ones that can double, not just a trade for 10 or 15%, but what stocks can double from right here. And we just want to sit our behind down in the positions that we have and let them work and not sell them prematurely. So AMD's in that laggard state. There's MU, and I've got certainly friends that are bottom fishers, and that they like this kind of action where we abhor this type of action, buying weak companies, looking for a bounce. That's just not the way we operate. But the leaders are AVGO. You can get everything that you want in Broadcom and NVIDIA. And then, on the manufacturing, side of things, it's Taiwan Semiconductor. See, notice you got a 94 relative strength. This is what you want to be. This is, if you've got an inclination, this is what you want to see. So this is got among the strongest stocks out there in the semi area. So that's quite attractive. ABGO is certainly a leader. Look at that knocking on the door. And NVIDIA's, again, that's the straw that stirs the drink. You're only $7 from an all-time high with a 98 relative strength. So I suggest buying the leaders, not the laggards.
Thank you.
You're welcome.
Couple of meetings ago, you were quite enthusiastic about the Pure Storage versus on the PSTG versus Western Digital or CTAC.
Oh yeah.
So, what are your thoughts now?
It looks horrible. I'm sure we were. Well, I was 9-10. We weren't looking at it. Because
no, I think it was meeting before, or maybe August or July, something like that.
Yeah, I know. You can clearly see here, you can see the stock breaking out, going sideways, making the next leg up. I'm sure we were very, very enthusiastic.
I'm sure May 5th was the day too, right? Like when? May 5th, is that clear? Around May 5th-ish, right? That I'm sure that's when we bought it. Or my bad, it would have been the 12th. It was that day the breaking of the pivot. Just
right there.
Yeah, 14th. Okay.
Yeah, right there. Yeah, that's where we bought it, and we got kicked out of it probably for certainly breaking the 50-day, like that day, we certainly got kicked out. If we liked it, you had STX, Seagate Technology, and also WDC, also in the area. But they're just, they were in made these ascending bases in an uptrend. Then, right there, that's when you had to sell it. That's when something changed. If you didn't sell it this day, right there on that very, bad expectation breaker right there. You would have sold that day. So it's really not setting up with the poor relative strength of 57. Right now, the leaders, the stocks, and and we mentioned that the last meeting, the stocks that are going to double, there's going to probably be 5 or 10 of these stocks that we've just looked at that are going to double in 12 months. Now, how they get from point A to point B, that's a different story, but they are the leading stocks in the marketplace today. And if you do have cushion, you can just sit. And we have cushion just about on every big cushion. We've got big profits in most of these. And we just, and then we just want to sit, and then we'll get kicked out of something that's a slower mover and try to move to a faster stock. For example, and this is something you'll have to contend with, guys, and you'll always want to know, well, am I on the fastest horse? Well, we sold this with a like break even, I believe, maybe a 2 or 3% profit, something like that, maybe a 2% loss, but we sold this on this expectation break here. And what got us interested in Melly were the earnings numbers, $37 this year, $50 next year. But this stock broke down on a downgrade right there. And we sold on day 2. It didn't bounce. We sold actually day 2 because it didn't immediately bounce. And these stocks that hug the 50-day for a period of time, that's not what you want. You want them, if they bounce off the 50-day, you want it to be dramatic, and you want them to just hit the 50-day. Everybody's seeing it and bounce off that hard, and that's where the institutions validate their opinion on the stock. So we sold this to move to a faster horse, and so we sold here and bought Kava instead of just holding this, looking for a rebound. Same kind of thing with Lilly. We sold Lilly right there with about a 10% profit, I think, maybe an 8% profit, because that was abnormal action, breaking the 50-day on volume. And you could see since then it's recovered. So it's resetting right here, but earnings, of course, are in 22 days. But, when when these things happen, the question is, well, do I have the fastest horse? Should I sell here? And, if it's living below the 50-day, it's normally a drag. And we sold this XBI over the last few days because it's living below the 50. So we cleaned this up to buy, one of those names that we mentioned before. So clearly clearly a laggard, not going anywhere. And so, you take opportunities like that were provided and just try to move your money into your best performing stocks, not the ones that are lagging. And, we were quite bullish on biotech, but, it's not cooperating right now.
If you look from the business point of view, GLP drug makers are similar to NVIDIA, but is in the chip maker. Demand in both businesses are exceptional.
Yeah. Yes.
So what would it take you to be enthusiastic about the Novo or Lilly to buy them again?
Well, I would be enthusiastic with Lilly right here. Buying it right back, like right here. You do have a month into the number, and I mean, yesterday was a better buy in it, but it's a slower mover. But I'm enthusiastic right here about buying it back, seeing if it can shake off the NVO. There was some recent negative news regarding NVO. I like Lilly better because it's always acted better, and I'd rather buy an American company than a foreign company. And their their drug is it's been shown to have more efficacy. Lilly's, that is, the tirzepatide. And so I like it right here. So yesterday was coming back over the 50 was a place to add it. And, what you'd like to see, you'd like to see this thing just come up to, the old highs and, and then go sideways a little bit and then break out to the upside. So yesterday was really the trigger back above the 50. So I like it. I just don't have room for any other companies, but you could buy this thing right here and use a stop the day before, which is below the 50-day right there, and you're trading right there at the danger zone. Very attractive in my view. I like it as a setup, as a blue chip setup, and I like Goldman Sachs right here too. So we're taking, we added Hood because it's breaking out. It's the first one to break it. Well, it's not the first one. The first one to break out was IBKR in the group, that in Jeffries. And but this is a blue chip stock that's setting up as well right here. But IBKR, see, there's the leader. And maybe Hood is right there. Hood's breaking out, getting over the pivots. Maybe Hood is right there, but this has been the leader along with Jeffries. But it's been on our screen for some time. But we're playing that group with Hood breaking out to a new high on volume today. So.
Hi, good evening, Roy. I was wondering if I could ask about, I have two, but if you can only cover one, that's fine. The first one is CDNA.
Yes. Yeah. Yeah, it's been hitting the screens for sure. It's charts great. Earnings 23 days. What exactly do they do? Do you know their product, Rachel?
I don't know.
Yeah. Anyway, monitor, I think this might be gastro transplant recipients. I'm not exactly sure.
Diagnostics and research.
Okay, diagnostics and research. Which area? Which organ?
Oh gosh, I'd have to look that up.
Okay, that's good enough right there. Tamdex is in that area, and this is one that we got kicked out of, and Transmedics, and we bought this back right there, and we sold it right there at pretty much break even. And it undercut today. It undercut 133.36 and turned back up. So this isn't your typical. This is this is setting up with a double bottom. It did undercut, and this is setting up right here. This could be the turn on this tomorrow, but it shouldn't be acting this way. And we ended up bailing on it because again, it wasn't working. Rachel, let me get back. I'm sorry, that was CDNA.
Yes.
So, So, the stock is right here about to break out. You can see the 34.86 pivot. It's a strong stock. You can see earnings triggered some buying pressure. Nice, nice upturn right there. And that was probably a 10,300. Yep. Stock was up 18%. Volume was up 459%. To tell you it's a game on now. The institutions are interested. So it's got really good action. I don't know much about it, but you've got sensible revenue gains and probably they're just going profitable for the first time. And that's what got people interested in it right now. So let's take a look at this, what it looks like on the weekly. Since one of these stocks that's been in a downtrend from forever, for 4 years, now it's in the uptrend. So it's a turnaround situation. You do have all this supply on the left side, but going back 18 months, most of this supply, you're just chewing through that. So it's an interesting turnaround situation. It's definitely acting great here. And one other tidbit, and I discovered this in the 90s. You'll find some leading stock market winners that have very high relative strength. Like here's a 99 relative strength, but the earnings per share rank is between 70 and 79. And I actually run a screen on that. And this is, if you weren't watching for this, it wouldn't necessarily hit your screen. It would have hit your screen near a pivot, near a 52-week high breakout, but it might necessarily not be in the IBD 50 or in the IBD 85. And that's really crucial. So that's a screen really that's very useful. That's brought me some of the winners before. You can see I have this screen. See earnings per share, 70 to 79, relative strength over 85. And that's not going to show up in that 85 screen. Let's just look at what's in that screen right here. See if you recognize any of these names. There's Lifetime Health that's been looking great. This TGTX has looked great as well. Those are two that there's Teva.
Road, they talked about Road on IBD Live.
They did.
Yeah,
Yeah,
this morning and yesterday. Yeah, and they've mentioned ALNY on IBD Live as well. Yeah.
Yeah, so we were long ALNY before we got kicked out. We got kicked out of it, but we did try it. So you had this power play-ish type of situation, and it's really still setting up. And the numbers, they've got very, very good revenue growth, and this is a new application for their product that was approved, I think, by the FDA, I believe, if I'm not mistaken. And so this looks like it's close to breaking out and going again. So this is really nice the way this is holding up, and the declines aren't very much. You can see this VCP, it's only down 15%. Now it's getting tighter. This is definitely on the cusp of being actionable here on the upside.
Yeah, definitely.
And what was the other one? Did you say ROAD?
IBD Live has covered ROAD this week.
That's great. So this group in the construction area, and so this is really, this is kind of a favorite way of getting in some of these leading stocks. Those that go to new highs, they have their pullbacks, and then you break the downtrend line. And so this was really actionable yesterday, really. So this looks quite good, and it fits into that theme of the rebuilding thing, maybe the hurricanes, but the group has been strong, and it's a leading stock in the group, along with like POWL. And so notice how the market is broadening out here, and that's what we like. So the market's broadening out, and incidentally, the market's broadening out, but we're oversold on the oscillators. We didn't take a look at that, but it's in your slide deck. So take a look at, the oscillators. You can see how oversold we are. The McClellan oscillator on the NASDAQ and the New York Stock Exchange, you can see that everything is positioned properly. It's positioned right currently.
Okay. And do you mind if I ask about the second original one that I had?
Of course.
It's T is in Tom, V is in Victor, T is in Tom, X is in X-ray.
PVTX.
Yes. It looks
Uh,
like it's ready to break out, and I think it's a fairly newer IPO.
Take a look. It's a cheap stock. It's only $1 billion market cap, so it's a tiny, tiny, tiny company. Let's take a look at it on the weekly. A lot of overhead. It's in an uptrend right now. It's too speculative for my blood. What I would typically do, and like the AONY they actually had big numbers. Those I would we took a shot with the XBI because you're getting a whole plethora of biotech companies that don't have numbers, but they've got novel applications, novel drugs in the pipeline. Because we didn't want the individual, risk of holding, something that we don't know anything about really.
Right.
You only need one of those to and get hammered to swear that you'll never do it again. Buying something where you don't know the product and you don't know uh, how Wall Street's going to react and embrace the company. So you got to be careful with those. Minervini loves to trade in that, fishing pond, but they're just not that liquid. They're not that liquid. This is trading only $25-30 million a day. And institutions, you need at least $100-200 million a day before the institutions get in. And institutions do drive everything. I thought that you were talking about this one, this TGTX. See, this is one that's hit our screen. And notice the difference between this one. Earnings are going to be up 1,300% next year. And you can see you've got triple digit earnings and revenue growth. So you have numbers. You have these numbers here that with the 96 relative strength, that's this would be a much more desirable situation from a biotech standpoint. This RNA was one we've had a couple of members have been talking. Well, I forget who the same member. He's normally on this call, and he's mentioned this the last two meetings. And this is a biotech company with no numbers, but it's just trading spectacularly well. So you can see a 99 relative strength, and they're in that RNA area. And don't exactly know what they do, but the stock is acting real well with no numbers. $5 billion market cap.
Thank you, Roy.
You're welcome.
Can I ask a couple of questions? There is a one stock, Zeta. I'm just curious, it never came on your screen. It has been quite a winner for me.
Congratulations.
Zeta.
Oh,
Zeta, Z-E-T-A.
It's been on our screen. We just didn't buy it like you. So congratulations. That's well done.
And do you have any views regarding the platform stocks like Autodesk, Shopify, Trade Desk? Because Autodesk and the Shopify are near the breakout point. They are kind of a double top.
Okay, let's get back. Hold on. Let's talk about your Zeta position here. Okay. So notice this. So this is worth really taking a look at, because here's a guy that's doubled his money probably on it. And let's take a look. Okay. So this is a stock that's not widely known. The market cap was about $3 billion before something happened. This stock's been in probably a stage 4 decline. It was in a stage 4 decline. Then now it's building the base. It got real sloppy down here. But let's take a look now. What got the stock going was right here. So there's your, right there or either right here. There's the breakout. And if you're following the money, and we run the up volume screens every single day to see if new opportunities will present themselves. Sometimes there are companies that you haven't even paid attention to, but that's the trigger. And so that's the trigger, and that's the institutional buying demand. So you can see that there was a trigger to alert you right there at 12. And if you did your homework, if you're following the stock, if it certainly appealed to you, you could have bought it on this pullback somewhere in here, and then you could have pressed it when there was just tremendous volume came in. Something happened right here. So this was really your clear buy signal on that day, right there when the stock gapped up, and it gapped up 20% on 400% in volume. And that was the trigger to tell you to get involved. And then the stock had some earnings drifted higher, came back, pulled back. Then you're looking, say if you're in that stock, you could see secondary entries to add some back or pressure position. Let me take some of these lines off. So right here, if you could have sold some right here and de-risked some, and then bought it back, and then the stock breaks out again. You add more, taking out that high right there. You could have pressed it there, and here there's no reason for you to do anything in the position, and it's just acting great. So they're in that database area. I don't know what makes these guys different than one of the other database companies, but it's acting great. It's certainly been a leader, and as long as it holds above that 21-day moving average, then it's a long-term hold. And when these stocks break out, see, those targets that I came up with before, guys, after these consolidations, you've got to have a little bit of vision. See, notice here, if you looked at this and said, hey, I think the stock can go up 50% from breaking the new high territory from 20 to 30. Well, it did. And this is the kind of move that Wes and I expect to have for a lot of these companies that we've looked at tonight. They're going to do this in the next 2 months. People are waiting for the pullback. The pullback's not going to necessarily happen, and you're going to be chasing it. And you're going to have this potential lockout rally, and this area here, the last leg of a lockout rally, that's where you make the most money. So my contention is that the next leg, and stocks like GEV and Nvidia and all these, that they're going to you can get this increase, this escalation in the next couple of months. And so that's you've got to visualize something that might happen that's positive, just like this Zeta. So well done on the Zeta. So you mentioned TTD. Yes, I mentioned this on Twitter 2 days ago. Setting up great. Yes, it along with APP are they're the leading vendors in the advertising space. They do something differently. Both of them do something differently. APP is mostly in the mobile area. This is primarily in the CTV desktop area. But this TTD looks great. Very, very strong numbers. They're the leader. It's really a blue chip company doing 56 billion in revenues. The stocks all over a 52-week high. And look at this. There's a green line breakout. So you get this, And it's nice for you guys to pull up companies like this. You get this that goes into a new high, the move, and that's at 120. And my contention technically is that this thing is just getting going. So this is definitely a buy. We don't own it, but we certainly like it. And we think it, once it gets to all-time high territory, game on. It can be a big one. It's definitely a blue chip growth stock in the space.
But similarly, Shopify and the Autodesk, they are also very close to near double top, like this year's top.
Shopify. This has been, big winner. It's been very, very sloppy. It's sort of rebuilding things. This was earnings right there. And again, watch these big days where you have this tremendous buying pressure. Run the screens so that you can see, well, what's up on big volume? And like FXI, and I mentioned this on the Twitter feed, FXI gave you that character change where it broke out when there was just tremendous, overwhelming buying demand, and the price, and that means the price is up, and institutions are piling in. When you get a situation like that, they typically go higher. Those stocks typically go higher. So this is sort of sloppy. It's rebuilding here. It's got decent numbers this year, next year. Of course, these numbers have really slowed down. The past few years, but but it's setting up. And then ACAD. No, not ACAD. What's
ADSK?
ADSK, right? It's setting up, so again, a software company, design software, that IGV in the software area just broke out today. It's, it's sloppy. I mean, it just needs to tighten up. This is something that it wouldn't be viable for me because it's just too erratic. It's just up, down, up, down. Yeah, it would be very difficult to get in here. And of course, you're in one of the worst performing groups in the market in this area.
Did you ever look at TradeWeb, TW?
Yeah, it's interesting. They're primarily in the fixed income area. And there's the breakout. 93 relative strength. Yeah, I have seen it. It's been for a while, and it's and nobody knows about this company. But look at look how this stock powered. This is the point that we're making. When these stocks come back and make all-time highs, they go significantly higher. I mean, when you get periods like this, they typically double. So this suggests, a $200 price target. So it looks, fantastic. And they're in the, they trade primarily, fixed income instruments, muni, government bonds, and so forth. That's their 4K. Looks very, very good.
Thank you.
Roy, can you please check MMYT, this Indian travel website?
Yeah, so we've been watching this stock forever, and I don't think we bought. You can see I have this downtrend line, and that's got to be the 11th. Okay, so there's the 11th. See, we had that key reversal. That's when, and we were like 80% cash on that reversal. We went from 80% cash to almost fully invested in like 3 days. And we were obviously looking at it right here, this MMYT, and we didn't buy it, but we like the numbers. We love India, and we just like a lot of, how big they are, how innovative they are. They speak English as well. entrepreneurs. It's great, great country. And there was no news right here. It just broke down, and there was no news. Oh, it was a downgrade.
I was stocked out this day, and now it is coming back up again. Do you think like it's a strength and it may go higher from here, or it is just like
It just needs it's not set up properly. So the stock is broken now, and it's going to need some time. If I owned it, I'd sell it right into this strength here, just move right back up here.
Oh, hey,
And
Roy, what happened is that because of the China uh, incentives by the government, a
yeah,
lot of foreign funds took money out of India and they started putting it to meet the index requirements for Chinese stocks. And
okay.
so MMYT was very high on the PE, so it suffered quite a bit from that also.
Thank you. Sometimes it's as simple as that. It's just why does something like that happen? It's just selling it outweighs the buying, and but we love the stock chart, but this pattern's not conducive right now. It needs to get tight. Notice here how tight it was. Notice here how tight it was. And then the break, you want this kind of action. So this is like not really what you're looking for. This is what you're looking for, like that.
yeah.
So, and you're hopeful that you get some of these. And this is what I think is going to happen too, guys. You're going to get an earnings start this Friday with banks, but we have a whole group of stocks that we're monitoring that are leaders right now. There are going to be some new stocks that have terrific earnings periods, performance, great guidance, and they're going to break out to new highs. And this is now we're right at this environment where we're about to go to this easy dollar environment. And on an easy dollar environment, this is the move that you're going to see these moves all over the place. And there are going to be so many setups that you're not going to know what to buy. And you buy the ones that break out the first, just like, back here, Short Ninja, when we bought, Short Ninja on this breakout, you buy the ones that break out first. But you won't, this is the kind of patterns that you want to be in patterns like that, that are not unruly, that are just very tight with an upside bias. That's really what you're looking for. But normally they begin when you have some type of catalyst and it's an earnings period or some kind of news where the institutions just come in big, and they're not through buying just on day one. It's a process for Fidelity to fill out their sheets. It's going to take months. And everybody's clamoring to get on board. That just that adds fuel to the fire.
Sure, yeah, thank you. Roy, if you don't mind, can you please check Clavio, KVYO also?
KVYO.
It's a fairly new IPO. Yeah.
Software for as a service, email marketing. It's wide and loose, but it is. You can clearly see that it's performing better. And $1 billion. They're doing $1 billion in business, a $10 billion company. It's new merchandise. So I don't know what their advantage is from a proprietary advantage versus other email marketing and so forth. But it is firming up here. So it's firming up, 92 relative strength. It doesn't have sort of what I'm looking for in terms of what I'm normally attracted to with my eye, but it's acting fairly well here.
Roy, if you get a chance, can you also check on on?
Yeah, we're long this. We're long it. And right here, it's setting up to, right here to double. You could press your position. This is a it's a short base, but nevertheless, it is a base. You got a 2-week base. What's that look like on the weekly?
I'm gonna say,
Ah,
same thing. We've got so much good merchandise that's like near highs, and what Roy and I have been talking about, it's calling them the survivors, the IPO survivors, that IPO'd in 2021 and are coming back. IPO'd at frothy valuations, got hammered, and then turned profitable. And it's one of this is a hard one where I'm just thinking about the story of it. Is it seems like they're almost like they're already highly penetrated or whatever in the market because it's been a hot shoe for people. But in reality, I think there's just so much more to go with it, and it'll be surprising. But it's nice that it's a great product, and already international and everything. But I don't know. Those are just a couple thoughts, and I only own one pair of shoes by them. Let's go. My wife owns two, but that helps to have that understanding that it is actually a high quality product, and um, just some thoughts.
thanks, Wes. And again, this is like right here. You could buy this. You could press it. Right here through 52.16. I mean, there's just so much stuff that's setting up that. I mean, and we're in. But yeah, if you unlimited funds, you could press it right here with the stop. With the stop below yesterday's low right there, and you can see we have this right there. We have that's sort of what we're watching. We're watching that alert to make sure it holds yesterday's low.
Roy, if you don't mind, what are your 3 top holdings for now?
Mr. MSTR, Palantir, and who, Wes?
Yeah, I have them up. So Nvidia is actually I think it's the biggest by dollar value right now.
Okay.
And then Mr. Palantir, Spotify, and then Flutter. That'd be like our top 5. We just took
Thank
Flutter
you.
up a little bit like 3 days ago or something. Maybe it was I bet it was Friday no, actually it was Thursday we took this Flutter up a little bit.
And guys, we do have millions in these positions too. That's not like we got 100 shares or 1,000 shares. These are big positions that we've got. And that's why we think it's valuable because, we're transparent and, we take our licks just like everyone else does. But, we'd like to share with you what we think is going to make you a lot of money. So
Roy, this SPOT Spotify still looks like it may be acting by zone, but what is your take on MSTR?
we think it goes to 400 to 1,000. Sooner than later. Yeah, go ahead, Wes.
Well, yeah, I was gonna say, I mean, look, it's not a buy like today. There's no setup, and you're gonna have to take the volatility both ways on this one, obviously. So just have it in a manageable position size where you can watch it come in 12%. I mean, or whatever that was from that peak to the 10-day. I mean, that was a big pullback, and that's a big part of it, position size, having that right. But it's not a buy, but I might have to. I mean, I own some like personally and everything, and that's a little bigger portion of my account. Well, I might just have to buy. Yeah, I'd rather it do that. I'd rather it do that. If it goes to 200, I might have to hold my nose and just buy it tomorrow at 201. going into all-time highs just out of principle, add a little bit to it, but it's gonna be pretty hard to do that. I don't want to raise my average cost to something by doubling down right there. But the fact is, I've really prefer all-time highs, and that gets me very excited, just because I know that's when things get hot. So yeah,
Isn't this
ideally it does that.
isn't this stock more like a meme stock like GameStop? There's a certain crowd in it, and they just want to hype it up because of the Bitcoin, but its fundamentals, if you see, are not good. Its composite rating, not
it's
good.
it's not, the fundamentals in this company. It's all about how much, Bitcoin do they own, and
Yeah.
at what
That's
price did they acquire it? It's an asset. And so it's a pseudo play. It's not the business, not their business, their analytical business. They're it's a small company. They're only doing 400 million in revenues, but they own 6 billion in Bitcoin. It's a Bitcoin.
More than that, I think, but yeah.
Yeah. So, you're not in this for the EPS rating or the composite rating or anything like that. You're in it just because it's a proxy. It's a proxy for Bitcoin. And since they borrow money and issue convertible bonds and buy more Bitcoin, it's a leveraged play, if you will. And it can, it can go much higher than the price of Bitcoin. So we are in it, like that. You mentioned the meme play. It's not. It can be just like Reddit or DDT, just like
yeah,
Robinhood sort of is, or it can be. Coins the same way, but we do know that that it can get, quote high just because it might be heavily shorted. People might be thinking it's a valuation play or whatever. I mean, notice here, notice when it broke out here, the stock went from 70 to 200 in a month. And anything once Bitcoin's not even at a 52-week high, and this is out the gate. If you take a look at Bitcoin through like IBIT, see, this is Bitcoin. It's not, it's quite a bit away from a 52-week high. That's showing you how compelling this micro strategy is in terms of a short squeeze, in terms of, we don't care if it's a meme stock or not. We know we're playing the buying pressure versus the selling pressure.
I
And
see. So
we got such a profit in it, we can let it we could have sold, anyone could have sold like in this move here with we're in this stock, we're up 30% or more, I believe. And you could have sold it on that first little normal pullback, which ordinary pullback, but then it gets real difficult in terms of getting the position back on. And so it's, this stock just had a normal reaction to the 10-day. We would expect, it to go sideways here, for a few days. And like Wes said, if we go sideways and then you take out that 200, that'd be a more reasonable place to buy, but not buy it after it's gone up three straight days. That's not provide you any reasonable pivot. It needs to set up again.
thank you very much.
Sure.
Hey, Roy, surprisingly, there is no Meta on your
Thank you,
radar.
Roy.
Is there any reason for that?
You're welcome. There's no what?
Meta. Is there any reason or?
Oh, Meta?
Yeah.
It should be. Yeah, we sold it
495, 60,
right.
around there.
That's what we
It was
sold.
that day.
So we sold it, and we sold it the market was coming under pressure right there that's 9-10. And we had raised cash before that. Yep. Yep.
We
So we
held it
sold
through
it.
9/11, put our stop in, as things were looking like we had a couple that were just on the cusp, I remember. And we just
Yeah, we
put a
got
stop in and they hit it.
Yeah, we put a stop in, and we normally don't do that like that, so that they show it. And
Right.
yeah, that's when we got kicked out that day right there, Wes, right that day right there, huh? Yep.
Okay.
So we like it. It definitely they're the leader in the Mag 7. But we didn't buy it back. We just sort of went with different horses, but we did own it. We did own it. Breaking the 50 right there. We didn't know if the market was going to come unglued or if it was going to turn. And, it made us feel stupid.
Any thoughts on Amazon?
One of my favorite companies, but, it's not acting great. Very, very poor action there. Kind of, building this base. These are lagging. Look at the relative strength. See, you've got to be careful. You've got to be careful that when you make a transition from the Mag 7, the leading stocks, then they sort of, they peak, roll over, relative strength, fails. So this is something I wouldn't own a stock with the relative strength under 85. So here, it would not be viable, or I would, I would not own this stock. I'd sell it if I owned it and move to stronger, you definitely sell this and move to Meta, own the strongest ones in the group. Netflix is looking great, so you want to own these. You want to own the strongest ones, not the weakest ones. You don't, Tesla is not viable, here. It's got to get through all this overhead right there. And it's just got, we'll see what happens. We'll see what happens when they report on Thursday with their autonomous driving.
Sure. Yeah. Thank
product.
you.
You're welcome.
I think your thoughts is going to be same for Microsoft as well, right?
Yeah, Microsoft laggard 42. No, but look, guys, look. Okay, when you hear me say that, just remember, Microsoft's not doubling. We looked at 17 stocks that we own, and we think half of them are going to double. So Microsoft with the relative strength at 42, with the $3 trillion market cap, is not going to double. But you had these, trades, like, you had a 10% trade right there. Here you had a 18% loss, a short. Here you had, a 15% uptrend. But, it can bounce. You can trade anything. Anything can bounce. But, it's certainly lagging. And it's just it's out of favor. It's too big. And the numbers are, probably coming down, and that's why it's been overowned. And so you don't want to get stuck with your buying power and having a bunch of Microsoft and Amazons on the books when you've got Nvidia that's going to take out its high. When you've got GEV that's going to 300, when you've got, Shopify that's can double, over time. So don't get caught in the Mag 7 just because they were great, before. But by the way, incidentally, a good way of playing that was that FNGS. This is FANG one time. Notice this cup in hand. Wes and I, we would have bought this today if we weren't fully invested. So this is a really nice, cup, and there's a perfect handle, and you're taking out that 49.82. See where I have the alert set up right there? So it hit our alerts today at 49.83. And this has 10 stocks, 10 FANG stocks. A couple of them aren't performing like Snowflake and AMD, but you've got the eight others that are widely known and widely held as well. But this is really what you want to see. And this is why this market, while we're getting so interested and enthusiastic about the market in general, and you can see that we've been very, very bullish, where we think the market's supportive and you buy the weakness. You buy the weakness because the institutions want to be buying, and that's what we're seeing. Look at the volume today see the volume spike going through the pivot, going through that 49.82. So, guys, if just remember, it's all about position size as well. See, if you bought this today at 49.83 under 50, then, you would probably use this recent low for your stop. People, they're always wanting to know, well, where would you put your stop? You put it on in this particular case, a recent low. That's where you would put it. But everything it matters, context matters. Like for this hood, and so we bought this hood today. If it takes out today's low, we're selling it. So that would be an expectation breaker. That would be, we want to see follow through immediately tomorrow. No more than one day. No more 1-2 tight days. And then that'll demonstrate how strong the position is. Like, for example, this GEV. If this GEV, see it's setting up here 2 days after it broke out. If this doesn't go in, if this doesn't come back to the 10-day, that's telling you that this is one of the strongest stocks in the marketplace today. And then, it's it's going to likely go much higher, much quicker than you would anticipate. So if you don't give this back and come all the way back to the 10-day, that's telling you how strong this is. This is a true basketball underwater. So, pay attention to, all these tomorrow. There are additional, we expect, big things from these companies moving forward. We don't think it's going to be more than a 3-month move. We think we think this market's can probably run through next summer from here. And, Wes didn't show you the seasonality today, but we've looked at that in past meetings, the presidential election seasonality, and it's very, very positive here. Despite October being such a weak market, just in general.
Boyd,
Yes.
what about CRS?
CRS. Hey, Amy.
Yes. How are you?
Man, this looks fantastic. So this is really what you're looking for. Now, it's a cyclical stock, that's got, a cyclical stock, that's, in this specialty metal area. And this is really what you're looking for. I mean, this is really classic. 98 relative strength, earnings up, 40% next year, another 20% the following year. This looks fantastic. I could see us moving into some of these names like this, Amy. You've been in this for a long time, probably, right? You're probably in this at 100 or so, under 100.
I was actually in it right around 110, like around there.
Yeah.
So I do have some, but I'm just wondering if I should keep holding it or.
Yeah, I mean, it looks great. I mean, when you get a winner like this, particularly when you're looking at the weekly and the monthly, I think you want to hold on until you get some kind of violation. And here you can see the trend on this. There's the 10-week. Mm-hmm. So look how, I mean, for you to hold on something like this, it's got these great numbers looking forward a couple of years, moving forward. I mean, this can easily be a $300 stock, in the next, year. And, there it is on the monthly. It's in this, it is obviously, extended, but it hasn't done anything There hasn't been any kind of violation yet. Until you break this low with with big volume, it's I would give it every opportunity to go higher, particularly since we're about to break out in these with these VCPs, and this is one of those that's right on the cusp at all-time high territory. I think it looks great, Amy.
Okay, thanks, Rory.
If I can ask you one more question, you like Hood because of the stock price action or from?
Yeah, mostly the stock price action. Yeah, I mean, I think it's really, like I mentioned before, it's sort of a catch-up play, and normally we don't do that. Now, we were in Hood, and we sold it. Somewhere. We sold half and maybe kept. This is one we had like 2%, 15%. We were 15% long right here. We were 15% long, and this was one of our holdings. And we didn't sell it because the market had that 2-day crash, if you recall, and they threw out the baby with the bathwater, and we just held our nose right here and said, man, we're not going to, we liked the company before. We're not going to give it up just because the market, quote, crash. But, it's made its way back. Really, your opportunity to buy it, your first opportunity was right there, technically. And we like it. We like the idea their client acquisition cost is fairly low. I think they're paying you $250, $500 if you open an IRA. They're opening a number of accounts. It's the only place that you can trade 24 hours a day in certain stocks. So they have a basket of stocks. I find that very interesting and useful. You do have a lot of retail buyers here, which is fine. I mean, they were in GameStop too. I wasn't in GameStop, but I would have taken a 10 bagger in the course of a week or 2 weeks or something. So, if you catch lightning in a bottle and it turns into a meme stock, well, that's great. But, this stock in this company, they've got legitimate numbers. So you've got triple digit numbers. It's fairly new, so they have a lot of growth ahead of them. And of course, they are the crypto broker right now, on the street. So they have, they've got a lot of good things. They've got great management, I think. And, stock's been basing. The numbers are good. The marketplace is large enough for somebody like these guys. And there's really the cup and handle. And what makes this cup and handle so nice is, here's the cup. You can see the cup and then the handle. And normally, the cups, when a cup occurs, you've got downside momentum. So can always be action like this on the left side. But because this market crashed, this was much deeper than expected.
Roy, can you please go back to MMYT? I have one question.
Yeah, sure.
So do you see this long red bar slicing through all the moving averages and closing below 50 moving average?
Yes.
So if there is no news and there is no general market correction happening, what would you do normally in this situation? Do you wait for a day or two? Or
I would have sold it that day because that was just too big of a reaction.
Mm-hmm.
And so I would have sold that day. Now, there was no reason to sell it until that day. And, it happened so quickly. How much was it down? Down 12%, down $12. So breaking the 50, I would have given it, I would have given it like the low of that day. When if you walk into something like this, and of course it matters what your cost basis is, but normally what we do is when it bottomed that first day, then you had that up day, the inside day, I would have put a stop right there, you know, taking out that low, that's where I would put a stop in. And again, so if I got stopped out there, would you buy it back right here? And that's what makes it difficult. Like, and I mentioned this on Twitter recently as well. This is a stock that we bought right here.
Mm-hmm.
And we were playing the theme, the power theme, the need for electricity generation, running all these data centers. You're going to have to wholesale electricity. Who are the leaders that are going to do it? Well, this is one of the leaders in that area. And we bought it right here coming back over the 50, and we sold it right there. We got stopped out.
Mm-hmm.
And that was the market for us. Now, we didn't know that. Look, 8:39. That was in early September. And then, so we didn't buy it back. And look at 9/11. See right there on the reversal, right there. Now that's below the 50. So we didn't buy it there, but back above the 50 the next day, or the next day you could have bought it back, and we didn't. And so this is one of the singular most regrets that we've got, where we got the right stock here at 85 and we got kicked out of it, lost money, and it reversed on us. But coming back above the 50, you could have taken another shot at it, but we did not. We played GEV instead, and we actually, made 60 points on that GEV.
So normally you don't wait till end of the week to see if it turns back.
No.
No, okay. And also you have this criteria, like until it is above 50 day, you won't buy that. Okay.
Yeah, just about, by nature of the type of pattern, a double bottom is going to take place below the 50 day typically. Okay. And, flat bases can be above it or below it, but depends on the type of pattern that you're dealing with. A cup and handle, you want it to always be above the 50 day. And, you want the 10 day above the 21 day and the 21 day above the 50 day. So you want it, you want to be in stocks that have, nice uptrends.
Mm-hmm. And in this one, what will be your sell signal? Like there are two.
Yes, yesterday.
Mm-hmm. Mm-hmm.
Yesterday, the outside day to the downside. And when you take a look at that, and that's why I was looking at, that GEV to see if they're going to come get that GEV as well. But VST, and, before we mentioned, look at the MACD. See the MACD looks like it's plateauing and peaking right here.
Mm-hmm.
So now the downside, it shouldn't break the 10 days. So your sell signal is when it went through this channel, and you can see when it went through this channel a number of times, see where it exceeded this, this channel right there. And then you had the biggest down day, biggest reversal from a 52-week high. That's a sell signal yesterday.
And Roy, what is this channel? Is it VWAP or some, what is that? Like this gray line, a white line?
The gray line, it's just a regression line to capture 95% of the upturn and 95% of the downturn. And it's a regression analysis. It's very similar to who's the guy with the trends? Very similar.
VWAP or what do you call that? No.
I forget what the trends are. Bollinger Bands, John Bollinger. So Bollinger Bands, so it's very similar to Bollinger Bands. It's just a plus or minus one standard deviation versus a mean over a 10 and 21 day period.
Okay.
But that was a sell signal right there. the biggest one day up to down in the entirety of the run. But it's up, it's up 50%, more than that, I guess. Almost a double, maybe like 90%. So it's, sort of went parabolic there. So you'd sell that right into, when it turned negative. So yesterday was a sell signal. Now it's going to be interesting to see, because in the middle of the runs, frequently you have something that's red hot, that you have action like this, and that sell signal is ignored, and then you recapture that and it goes to all-time highs. So I still think, notwithstanding the idea that we're looking at some of these technical indicators, I still have high hopes for the group and for, CEG, VST, NRG, and, GEV. But that was a sell signal on a short-term basis right there. But if it finds support right there at the 10-day and bounces, that'll give you an opportunity to buy, to add to it or initiate a position with a real tight stop.
Okay. Okay. Thank you, Roy. Thank you.
You're welcome.
That's really helpful. Thank you.
Hey, Roy, what's your take on gold?
I don't. It was reversed. It reversed down today. Don't have a. It's slow, but it has been working. There's a big breakout. So there's the breakout. This, we call it a Brobdingnagian base. After that was like a 10-year, 15-year breakout. Very bullish. It's bullish. We don't own any, but there's the breakout, and it has worked from 200 to 250. It's a little bit, it's a little bit slower. Well, it's a lot slower than these other high-powered setups, but it's bullish. It's bullish and strong.
Would it be fair to say that since you're bullish on MicroStrategy, you are by default bullish on Bitcoin and also gold?
Yeah, not necessarily. We don't. We're not necessarily bullish on gold, but I like the chart, and we don't have room to buy everything. So and MicroStrategy is all about Bitcoin. So we are very bullish regarding Bitcoin, but it's not setting up yet, which is interesting that MicroStrategy is just knocking on the door at new highs, but Bitcoin in itself hasn't. So let me see. There's the monthly on IBIT, the daily, and you do have a turn here where the 10-day is above the 21-day. 10 days a green line where it broke out. So what you should be watching is this right here now. So, if this thing goes sideways or takes this trend line out, that's yesterday's high right there. It can be bought right there. So we're watching this closely, and I don't know how much you need if you've got MicroStrategy, but we would right there taking yesterday's high out would be a place to initiate. Like you have some kind of like something to work off of, like of a pivot. And then if that happened, you'd use today's low as your stop. And the bigger the position that you can make it, the better, as long as you can sleep at night, knowing full well that these things can drop. But that was a 20% drop overnight on that was I don't know what the news was, but the market was getting beaten up that day. But you've got to make sure that that you can withstand anyway the volatility. But you'd like to see this get tight for a day or two and then take this pivot out, and you can see you'll see a lot of people jump on board there. and MicroStrategy might be moving ahead of time. So, the true move doesn't take place until, you're at 75,000. And if you want to take a look at actual Bitcoin, what that looks like, let's take a look at that. There's Bitcoin right here. It's below the 200, but notice, notice there's a spike down low. Do you guys, by the way, do you see this? This is on stock charts. Do you see this chart, guys, by the way?
Yes.
Yes. Yeah.
Okay. And so the red line is the 200-day. So there's the spike down. And this is, man, gee whiz. And so you just remember this, you remember this over time. But back in 1998, I was in AOL, Yahoo, some Chinese names, and they were the leading group, and they all corrected. They had this big correction. This was in the summer of 1998, and then they rallied, and then you had a retest, and just like this, you had the big plummet, the panic low, the move higher, and then the retest. And on that retest, and I recall because I got kicked out of some stocks, and like equivalent to a day like this, where like, okay, it's about to come unglued. I couldn't take the selling, and yet that was the retest that held. And then it turned out, then those stocks went up multiples, like 300, 400, 500 from like a period like this. You got this shakeout on Bitcoin, the move back up to the 200-day. It wasn't time or price ready. The retest, now it's coming back above the 200. Like the second mouse gets the cheese, like it's ready to go here. You got a little shake and bake action where for 2 days it got nasty. It's building the base again. And so now this is how bottoms are formed. And the game's not on until you get up here and take out, the all-time highs. But that's not far. You get a quick move up. It happens, it can happen in, 5 trading days. It can happen. And I look for this thing to really begin like over a weekend when it's quiet and, and we're not trading for, 3 days. And then you get the move there on the upside, and we have upside volatility. That's what we're looking for. But the setup's not there yet. I just made something look a little bit creative. But until it takes out the high and goes at 52-week highs, it's just basing. But when it does, and we played this, we got this move from right here from 44,000 to 66,000, that 50% move in IBIT. That's how we played it. But it made move to all-time highs. So you get your move to all-time highs at 75,000. That's when it goes. It goes from 75,000 to 150,000, like in 2 months. See right here, look what happened in February, March. So that's what we're holding out for. So this is this hadn't quite triggered yet, but man, it's right on the cusp of starting to. This is a long base. It's starting to look very good again, and it hasn't moved yet because all these other names have moved, and so that's what we're looking for.
Roy, it's Amy again.
Yes, Amy.
What do you think of Rocket? I joined late, so maybe you covered it, but the projections look good and the relative strength is good. And I barely have a profit in it right now, but it just doesn't, when you look at where it's at currently, it just doesn't look that good. So I'm just trying to decide whether I want to keep it or chuck it.
What's the stock, Amy?
RKT.
Okay. Yeah, we actually, this is sort of an expectation breaker. We talked about this last month because clearly they're the leader and they're the biggest player, I believe, in the refinancing, business. And the stock broke out to new highs, 15 to 21. It peaked, came into the 21-day, turned up, and it's sloppy here. It's below the 50-day. I wouldn't, a break below the 50-day, depending on how that happens, that's important. But, it did happen on really big volume. And, it's a sell for me, Amy.
Okay. That's kind of what I was thinking too. Okay. Thanks, Roy.
And look at this, and I was looking at this, these insurance companies, which has been leading stocks. See, take a look at how fast, look how this turned. And this was an insurance company, it was a small company, but the insurance group was in favor. But look how this thing broke out on earnings, had this great move like it was game on. And then look at how fast it changed. So, when you get that one down day like that is an expectation breaker. Normally, the best thing to do is sell. We always sell. Depending on how hard it is and how hard significant the break is, many times, 90% of the time, we sell when you get a break like that on day one. And the only reason that we would not sell is if we had a profit in it and we said, oh, we'll give it like one more day. The way that we sold that Melly, and so that Melly is obviously higher quality, but what happened, you got to protect yourself from something like this, from a move, the break of the 50 to down another 30%. And, so that, now you're down 50% in your position. And that's what's, those are painful when you get, when you walk into something like that. Sometimes there's nothing that you can do. But when you get those clues like that, those are typically sell signals.
Thank you.
Hey, Roy, I would like to ask you, what is your opinion about SE? It seems that it's coming out of a stage 1.
Yeah. It looks good. The numbers are great. It looks very similar to Coupang, and we own Coupang instead of SE. But, great relative strength, 98. You got earnings are in 35 days, so you got time. It's really been a nice, other than this, reaction here. Remember, the NASDAQ sold off 16% during this period right here, when SE came in, but it quickly snapped all the way back, made new highs. It's definitely a strong stock. The numbers look really strong this year and next year. I really, I like the way that it looks. Now, it has overhead, just like Coupang does. Let's take a look. And I was comparing both of these. Look at all this overhead, see, on this side. But, you're talking about going out, several years. So that's what this looks like. And then that Coupang, CPNG. See how similar these look? And, it's probably, a coin flip. We just own Coupang. And, but SE looks, they're in the same group. Nice relative strength. It's turnaround situation. Looks very good.
Thank you.
Sure.
Roy, how about
Yeah.
Sterling, STRL?
It's a great company. So the Sterling, and it's in a good area too, STRL. It's in that building, heavy machinery, just like AGX. Looks great. So looks like Powell. It's again, it's in that realm that Amy mentioned, the cyclical stocks that she mentioned with Carpenter, a moment ago. Looks fantastic. So looks, it looks really good.
Okay.
SX. Let me see. What's SPX, SPXS? No, SPXC. Yeah, this is another one in that machinery area. This company is located in Charlotte. That's why I noticed this company. But look at this nice little uptrend. You know, this has been in this nice little uptrend. And that's definitely an area that we should look at, guys, in that, you know, heavy machinery. This popped out, got my attention. Notice, see that 95 where it broke out on earnings. And this is what I'm talking about, guys. So, we didn't buy it here, but there's going to be as earnings system earnings, the season comes through. You know, you want to look at something like this. So you can get some stocks that break out on earnings. They get great, give good guidance. They'll come in like a day or two. You don't want them to really take out the low of day one. You know, you want them to hold that low. If they hold that low and build this little base, you can get more comfortable with it and buy coming out of, one of these small digestions. But this is, some of these leading stocks are going to show up this way and you have to be ready for them. So, earnings season really starts again Friday with the banks. But you're going to have some of these companies that pre-announce. So that's why you need to look at this every single day and keep your watch list fresh, because you might end up selling 25-50% of all your holdings because of better opportunities that present during earnings season, like that Oracle, for example. See, this Oracle had this great, look at how this Oracle had this picture. This is a major, big, massive company, 483 billion, but it didn't even violate the day one. And there's your catalyst right there. That's what you want to look for. I was surprised. And this is one that certainly we were looking at buying it right here at 160, but it's such a big company that, we were wondering, well, how fast will this horse go? But it's going to 200 and it's taking out that 173 right here. So this is on the way to 400. The strongest go stronger. That's why, we favor buying strength, not buying weakness like MU or ARM. We favor buying stuff like Sterling, Oracle, EME, Powell, PWR, etc., on and on and on.
Roy, I hope you haven't covered this one. MSI?
Oh, we did not. Is that Motorola? Yeah, it looks great. Telecom consumer products. Man, that's really that is a tight digestion right there. I mean, that's really looks beautiful. Numbers solid. Looks, I mean, just definitely a long-term leader. Look, that just looks fantastic. You just don't know how long these runs, how long they run. And then, you go through a period like this where they go sideways for a few years and then, and then go again. So it's beautiful.
I was wondering if there's enough institutional money behind it, if the volumes or if the money flow is big enough.
Let's take a look. Oh yeah. Yeah, you got plenty, I don't know why manufacturers, two-way radios, wireless network. I'm not sure. I'm not sure. I really haven't followed. Motorola was the first stock that I bought in 1987. First stock that I bought, and I don't know what's been going on with the spinoffs and the parent and who's doing what, but you definitely have institutions in here. You've got A+ funds here. and they're corroborating the fundamentals here, and there's nothing not to like right here. But it's
Yeah,
something.
I think they're approaching Axon in terms of what they're doing. So they've come up with body cams and
Really,
yeah.
really, no kidding. Well, that's a new business. So new business. Your style looks fantastic. Thanks.
Thank you.
What about FICO?
Same kind of long-term winner like Motorola. All you can do is, and you just look at this and just say, why didn't I get on board? Why didn't I get on board at some point? You had 15 years to buy it. And that's what occurs to me. Like, gee whiz, I can't hope I'll be dead in 15 years, but I could have held it back in 2009. Unfortunately, I mean, it's just nothing not to like here either. Beautiful. Yeah, congratulations on that one. Okay, guys, we'll go just a few more minutes. What else are you looking at? What else are you seeing? You see. What am I looking at? I missed that app, APP. Missed that one so far anyway, but man, again, there's that back to what we were talking about, this green line breakout. I might have to revisit here on the first pullback. And really, this is what I want to get comfortable with is the first pullback to the breakout. If that happens and it comes in right here, then it's Bible. But right there breaking out, like if I would have looked at that long-term chart earlier, we probably would have bought it right there. We would have been forced to buy it right there at 116. That's a high of 116. See, going through the all-time high. So pay attention to that, the all-time highs. Now, the only place that I've been able to find the all-time highs, guys, in all the software and stuff that I run, like an all-time high, it's under bar chart, and bar chart looks like, let me pull it up. Oops, bar chart. Pull up stocks, go to new highs. And then this is the only place that I've seen it. Right here, you can go to all-time highs. All-time highs. And this is where, like, guys, coming out of this, going into this new uptrend, we're in this power trend. This is where you can get the stocks that go crazy. They're in all-time high territory. So there's the biotech #1 IBD 50 stock, ADMA. Not really following it, but there's ANET, there's app, APP, there's Axon, there's Badge Meter. We're looking at Badge Meter and ITRI. There's Instacart. Instacart IPO looks great. There's Kava. There's that FICO. There's EME. There's Brinker. There's Commvault that broke out today. And there's IBM right there. So you can see there's LDOS, the security company. There's Motorola. There's that Natera that looks great. Mastech that's in the same business as PWR. There's Oracle. There's Parsons, which is a consulting government agency company. See, this is where right here, this is where you need to pay attention. Like there's that Sterling that someone mentioned earlier. See, this is the number one place that you want to be looking at. There's TW, TDD. Because once these stocks get into all-time high territory, there's absolutely no overhead, and they have a propensity to go higher. So the only place that I've been able to find this has been bar chart, where I can go in, and I don't have any other way of screening it. MarketSmith, you can't do that. They just screen 52-week highs, not all-time highs. But there's Carlisle, the consulting company, like KKR and Epicor and so forth. So this is a great place to look. There's that GEV, and the reason that I've been attracted to looking at all these is this is where, in a great market environment like we haven't had it. It's been brutal and tough and rotational, but we have this brief period of time, I think, from the next 3 to 6 months where it can get really, really good. And it's just been so long that we've been rotating and all over the place. It's been so long that we've been in a steady uptrend for a couple of years. And it's possible that we're just about ready to ignite that phase of the bull market.
So, Roy, would you add like a to Palantir position? I mean, that would be when it breaks the all-time high.
For what? For who is that? For what?
For Palantir, PLTR.
Yeah, we'll buy more, and you have to, and guys. And we've talked about this forever. There's the rebound, for the IPOs that got trashed and they came back. And and I made this note as well. These stocks are reminding me of like CrowdStrike in maybe 2017, 2018. So take a look at this. But see, Palantir, it's a matter of how much can you handle in terms of concentration. And, we're kind of running a portfolio of 10 to 15 names right now. And we want to put more in our swing trading account, concentrate in like 5 or 10 names. But you got to feel real comfortable about your position sizing, because we're talking about millions of dollars. So for us, it's, we might have, like, I'm more comfortable having 10 to 15 names, but like if you're trying to build that equity and we all want to double our account, of course, but it's going to be very hard to double your account, when you have 15 names. It's possible when you get in a market environment like we're presently about to go in. But for you to do that, to like win a U.S. investment championship contest, you need to have 20% of your equity in one stock, 25%, 25%. And many times over the years, I've had all my money. I've had $1 million many times in one position, and going back 30 years. And but it can, if you don't cut your losses quicker, you'll be prepared to regret it. So there's Palantir, but I wanted to mention CrowdStrike. See, look at this setup, guys. See, look at and back. This is what's setting up on some of this stuff like Palantir, I believe. So let's just change the date. So change the date, like 5/29/2020, 5/05/29/2020. Okay, so look how this looked. 100 all the way to 34. This is the 2020 bear market. 100 to 34, and then the rally back, and then go forward. There's the green line breakout all-time highs. That would be similar to what we would expect with Palantir. So if Palantir gives you this type of action, like right here, and look, it's straight up. So, it's doubled in the course of 3 months. That's not the place that you sell it. That's the place that you buy it, that you add more to it. That's, so be prepared there. That's going to corroborate that you're right. And notice, see, you had the shakeout right there. It took out the monthly low and then resumed its uptrend. And that's the move that you've got. See, where you took out the 100, and then you had this area, tumultuous zone right there around 100, and then you went higher. And that is what I think this market's setting up to do. And see, there's your buy point, green line breakout at, we went from 100 to 300. And that's the move in these stocks that I'm hoping for and expecting, like in Palantir, to get a move like this over the course of, like I said, the next 6 to 9 months. And you get a move, where you take out the 52-week, you take out the all-time high, and you get a double. And in this case, you went up, almost 150%. So with that, guys, I'm gonna call it a night. Wanted to thank you for attending tonight. Man, it's a pleasure just talking about stocks, and I hope that you, and I'm sure you do, people tune in, follow us to get these, hopefully they're gems of wisdom. This is just, it's brutal in this marketplace, but now the worm is turning. I think we're going to have a great year end, and I wouldn't be surprised if we're in the 50% range by the end of the year. We've made great strides so far. But, I would like to look back and say, man, 50 to 60, 70% is how we close the year based on where we are and what we think is going to happen. And that can be, that'll give you a lot of cushion over the next few years to do whatever you would like to do. So that's why we do this. We hope that we can provide you with money-making ideas, and you share this with your constituents. So we thank you for attending tonight, and we'll see you next month. Have a great evening, guys.
Thanks for your time. Have a good night.
Thank you. You guys are the best.
You're welcome, guys.
Thank you again.
Thank
Bye.
you. Have a good night.
Our pleasure.